Good morning, dear friends. My name is Clive Thompson. I'm here to tell you the stock market and investment and financial news of today and yesterday. Today is Friday, August the 8th, 2025. This is a little bit experimental. I'm waiting to see if people like it. I'll judge that by if people subscribe to me. So if you like to hear more financial news reports every morning, do subscribe. I'll also be doing at the weekend a weekly report. I don't know if that will come out on Saturday or Sunday, but if you want to know what happened last week in the financial markets, look out for the report over the weekend. So last night on Wall Street, the major indices were almost unchanged. The Nasdaq was very slightly up, about 0.3% on the session. It actually hit another all-time record, and the S&P 500 was down very, very slightly, almost no change. Now, one of the reasons which stopped the S&P from rising was some bad news, or seemingly bad news, from the pharmaceutical giant Eli Lilly. Their shares plunged 14% yesterday, and the reason for that was their trial of an obesity drug didn't quite live up to expectations. According to the trial results, they said that their patients lost an average of 12% of weight, and somehow it seems that Wall Street was expecting 15% loss. I don't see the problem here. I mean, the fact is the trial seems to prove that the drug works, so it would, in my opinion, be good news. But either way, Wall Street is very unforgiving and it's very nervous. So sometimes in life, as in life, being good enough is what you need, is not enough. You have to be better than everyone thought you'd be. Perhaps Eli Lilly should have put a warning on the weight loss pill packet saying, eat less. That's one way to lose weight. Now, Eli Lilly already have a weight loss drug, but the difference between the two is the one which is approved by the drug FDA, the Federal Drug Administration, is involving injections, whereas the one which is going through the trials is a oral daily pill. Now, one of the winners on Wall Street last night, and perhaps slightly unsurprisingly, was Novo Nordisk, who, funnily enough, have a daily oral weight loss pill undergoing trials. So, in a way, Eli Lilly's not living up to expectations made investors say, oh, well, let's buy another one. And they bought Novo Nordisk. And the share price of Novo Nordisk rose 7.5% last night. Now, perhaps just people are wondering which one of the two companies is the better buy. Well, there's lots of ways of looking at that. One of the simplest ways people look at stocks is the price-earnings ratio. And Novo Nordisk is on a slightly expensive, Eli Lilly is on a slightly expensive price-earnings ratio of around 22.7 times, whereas Novo Nordisk is on a slightly cheap price-earnings ratio of 11.1 times. So if we look at it in isolation, Novo Nordisk might look like the better deal. But sophisticated investors don't just look at price-earnings ratios. Of course, a low price-earnings ratio in isolation is the better deal. But if you're sophisticated, you also look at the growth. And when you talk about growth, the higher the better. A company with high growth expectations typically has a higher price-earnings ratio, whereas a company with low growth expectations typically has a lower price-earnings ratio. So the question is, what's growth? Well, there's several ways to measure that. You can measure growth in sales, growth in earnings, growth in EBITDA, that's earnings before interest, tax, and depreciation, and so on. So how do you measure and how do you judge price earnings and growth and come to a conclusion as to which is the better company? Well, one popular way, which is used by sophisticated investors, is to divide the price earnings ratio by the expected future growth. And that's known as the PEG ratio, P-E-G, or price earnings growth ratio. So the lower the number, the more attractive the company seems. Ideally, you want the growth to be higher than the price-earnings ratio, which would give you a PEG ratio, PEG ratio, of below 1. But in today's elevated stock markets, a PEG ratio below 1 is a little bit of a rare animal, but does exist here, there, and everywhere. Now, perhaps this sounds like complicated maths, so you don't need to worry. If you want to look up PEG ratios, there's lots of websites which have that information for you and have done the maths for you. I sometimes use Market Screener, and that one tells me that the 2026 PEG ratio for Eli Lilly is 0.7. It's below 1. That's good value. And it tells me that the PEG ratio for Novo Nordisk is 1.0, which one could describe as fair value. Now, just to give you a little bit of comparison about the PEG ratio elsewhere, we talked yesterday about Palantir and Tesla. So Palantir is a company with very, very high growth in sales, and it's on a prospective P ratio for 2026 of 308 times earnings. That's very expensive. And according to the analyst report, it has a 2026 PEG ratio of 9.5. That seems very expensive. Tesla, on the other hand, has a forecast 2026 PEG ratio of 2.7, meaning it's above 1, so it's also relatively or quite overvalued. Let's just say that based on P ratios and PEG ratios, the biotech and pharmaceutical arena of investments does generally seem better value than the technology and artificial intelligence sectors. Now, just want to mention that none of these companies are investment recommendations by me to anybody. I'm just giving you information. Going on, last night, we saw that President Trump nominated the Council of Economic Advisors chairman, Stephen Miran, to replace Adriana Kugler on the Federal Board Reserve of Governors. She unexpectedly resigned last week. Now, the Fed Board of Governors comprises 6 members plus the chairman, who's Jerome Powell at the moment. So with 2 dissenters last week on interest rate policy, and with the extra resignation we've seen in the appointment of Steve Miran, it now means that if this nomination is confirmed, President Trump will be very close to getting the control over Fed policy that he wants, because there'll be 3 people in his camp out of the 7 or 6, if you like, plus the chairman. Now, Stephen Miran is well known for supporting a lower interest rate policy, and he advocates for greater presidential control over the Federal Reserve. He thinks that the governors should serve at the will of the president, as opposed to the current 14-year protected term. So at the moment, in theory at least, the president cannot fire the governors, but if they're at will, which is what Stephen Miran seems to support, then he would be able to remove them at his will. So on that news, unsurprisingly, gold rose because more presidential control of the Federal Reserve seems to reduce its independence. So spot gold rose $29 on the news, and it's currently, as I speak, I see on the screen, $3,396, 3396, slightly below the 3,400 level. So the creeping control of the Federal Reserve by President Trump probably won't be seen as a good thing by international investors outside the United States. So it wouldn't surprise me if gold soars today as the world wakes up to this news and realizes that we're going to see lower interest rates, short-term interest rates anyway, and we're going to see less Federal Reserve independence. So with gold 3394 now I see, I think the 3,400 level is inches away. It could be easily breached today, and it wouldn't be surprised to see the all-time record of gold, 3,500, smashed in the coming weeks or maybe even days. Silver is currently hovering just above $38, and would need to rise another dollar or so to another $1.50 to breach the recent high price of $39.50. I think that if gold does what I expect it's going to do, silver and other precious metals are going to follow in its wake, and we will see that breach coming. Bitcoin inched up a little on the news to 116,589 from 113,000 yesterday at one point. European stock markets were relatively flat yesterday, and according to the futures indices, they're going to open very slightly higher this morning. And US stock market futures are pointing to new all-time records, with the indices expected to open a fifth of 1% higher. Not very much higher, but enough to break more records. Asian stock markets today were mixed. The Nikkei 225 was up 1.86. People are hoping for relief on the tariffs front, but the Hang Seng index in Hong Kong fell 0.86%. Crude oil at $63.54 continues to slip slightly, as it has been doing for a while. With extra supply of crude oil and reduced shipping to the USA, it's not surprising that the price is trending downwards. Bond yields around the world are little changed. The US 10-year is at 4.25 compared with 4.24 yesterday, and the UK 10-year little changed at 4.56. So we can say that within the bond market, there's no signs of stress showing at the moment. So that's the financial news for today, August the 8th, Friday, August the 8th, 2025. I'll be looking to see how many people like this by looking at if I've got any new subscribers. I hope to do a broadcast of the weekly financial news over this weekend, so stay tuned for that. And if I do get a lot of new subscribers, I'll certainly make this a daily podcast so you can wake up to it each morning. Thank you very much, and goodbye to all my viewers. Thumbs up.